All right, back here with Mr. Kevin Hill, taking a look at our DHL supply chain pricing power index through the carrier's lens. We're still at 70. We've been there for a while now. Kind of as we spoke about in the first half of the hour. It's not that we are stuck in neutral, but we seem to be stuck in fifth gear. Everything's humming along, but there's not all that much volatility.
There isn't, except maybe in the reefer market, right? In the refrigerated market, that's what's keeping it at 70. If the refrigerated market matched the van market, we'd probably be at 80. Maybe a little bit higher right now, but tender rejections across the board, are still plus 20, and at plus 20, the pricing power is with the carriers, the brokers, the 3PLs.
Yeah, I mean, there's some that will argue that if you even get into the 10, 12 range, that you're getting towards pricing power, maybe towards 50, leaning towards the carriers. We're still above 25. Let's take a look at our volumes here, just to get an idea of this lack of volatility, right? We've just had volumes edging up between 15 and 16,000 pretty much for the entire year, ever since that winter event that kind of pushed freight markets into disarray. But we just stood there, and at the same time, we've had tender rejection rates that have also stayed pretty high. They've come down from 30 to 25, but again, just very, very high historically.
That is very high, 25%. That's 1 in every 4 loads are being rejected by carriers, by brokers, right, out there. And that is just a very tight market, but we've stayed that way, and we can see volumes. This is the 2020 data, right? So if we take about this time, about 4th of July, we started that uptrend, and we've been at these levels for a year now. So when does it break? I mean, does it break?
Yeah,
what does the consumer do, Andrew?
Yeah, that's the question, right? It's that what does the consumer do? We are seeing a reversion back to service spending, but it's not coming at a detriment to good spending right now. We've still got really strong, all of the pandemic winners, the online electronics, home improvement, furniture, they're down from triple digits, but they're still up 60, 50, 40% over 2019, just unbridled demand. We can take a look here at our van versus reefer volumes to see how this is playing out into freight volumes. On our next chart, when it comes up, you'll see that van volumes have stayed really strong since this winter event. They've volatile a little bit, while reefer demand has come down considerably. And this is a bit surprising to me. I do think that reefer will find a footing, but let's just remember we have to put everything through a lens of context that it has come down 20%, but it's still well above where we were this time last year and any time prior to that.
What we're going to find out here in the next few minutes is that the imports have not stopped whatsoever. We have Chris Richards at Steam. I was talking to him before I came up here, and we were just talking about how outrageous the import market still is, just trying to find capacity on ships. Steve Ferraro was talking about it as well. Andrew Lockwood was talking about that as well. Those imports keep coming in, so as long as those imports are coming in, we're going to see volumes, especially on the van side, stay at these historic levels.
Yeah, and you're seeing, we can take a look at our next chart. You can see that those import volumes are actually driving all of the capacity differences and the disparities in capacity on the van side. So our chart of the U.S. map here, if we can get it up, you can see where it's actually our new capacity index. And this takes a look at head haul, so outbound minus inbound volume, and our rejection rate. So the dark blue are the tightest capacity markets. It's on a 1 to 100 basis, 0 to 100 basis.
Yeah.
You're looking at 100 in Ontario and 100 in Savannah, 98 in Atlanta. It's being driven by the ports. That is where you're seeing the tightest capacity.
In New York, right here around Philadelphia, and Chicago up in the Midwest. So those are huge freight markets. Those 4 or 5 account for 25% to a third of all freight volumes in the U.S. So to see that the capacity is so tight and the volume levels up here, not really ignore the rest of the map, but this is going to tell you the story. Those huge markets are still humming along. Imports are still coming in. There's no end in sight to this bull run.
No, there's not. And even what I was going to say is, even when the reversion does happen to an even more meaningful degree, inventories are just historically low. They are unbelievably low, really, across the board, across many retail sectors and across manufacturing too, that even when that reversion happens, there's going to be a lag before those importers begin to draw down their imports. So they're going to try to build inventories here towards the back end of the year into 2023, and that's going to keep freight demand high pushing into next year.
It is, and Chris has some really great insights on that. He's been working with customers who are trying to get their goods onto the shores because their inventory levels are so low. They're selling out of everything. They can't get the products in overseas.
All right, dealing with great demand, you want to have some inventory to sell them, right? So let's take a look at our next chart. This is looking at freight rates. We're looking at the truck stop rate in blue. So this is spot rates, and then we've got contract rates here from FreightWaves in orange. Just still rising. I mean, we're not even really into the peak season of the summer. We're butting up against it. We're not even, we've still got the peak season in the back half of the year, and we're at all-time highs on spot and contract rates.
I know. It's going up. The demand is just there, and as long as the consumer is out spending, property values are rising, stock market's rising, everyone feels wealthy, a little bit flush, and they're out spending right now.
Yeah, they're traveling too. That's what we're having too. We're seeing a lot of people spending more money outside of their metro statistical area. So, all right, that's been great. Thank you so much, Mr. Kevin Hill, for this carrier update.